Mhm.
And, where we are today in that journey is we're a $4 trillion asset class. That's pretty good for a new asset class. But if we extrapolate the trend rate of network adoption, we get to $100 trillion within 8 years. So we're only 4% of the way there. This
Only
is the biggest
4%.
trade So it's the biggest macro trade of all time.
Raoul Pal highlights Bitcoin's rapid rise to a $4 trillion asset class, predicting it could reach $200 trillion within 8 years as adoption accelerates. He explains that global liquidity and currency debasement are driving asset prices higher, making crypto and technology the most powerful macro trades of this era. Pal believes Bitcoin's strength, combined with growing institutional interest, signals another major rally ahead. He calls crypto the cornerstone of a new financial system built on digital innovation and liquidity expansion. He also stresses that token burns only matter when backed by real demand and utility, like Binance's model, while others, such as Shiba Inu, fail without adoption.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
So I realized how important it was. And over time, it was a small part of my portfolio. By the time we got to 2020, I'd been invested, I'd sold out, and then I bought back into the panic in 2020 into Bitcoin. And I really went down the rabbit hole, started developing the deepest set of analysis and tools that exists today in Global Macro Investor based on this. And I realized that the central banks around the world were using a trick to manage the debt. And that trick was the debasement of currency via liquidity, whether it was the use of the central bank balance sheets or whether it was the Fed net liquidity measure using the Treasury General account, the reverse repo and the balance sheet, or using the banking system to absorb the bonds that they needed to sell. I realized the entire system was based around refinancing of these massive debts. And what that was doing is back in 2008, we had a debt jubilee. And as opposed to forgiving the debts, all the central banks forgave interest payments on the debts. That's what zero interest rates were. And it allows everybody to restructure their debts. And over the next several years, everyone restructured their debts to 3 to 5 years. That created a perfect 4-year business cycle based around the refinancing of debts, driven by liquidity. But when you look at it overall, the liquidity injections that come keep growing over time because the debt that needs servicing keeps growing. That was correlated 97.5% with the returns of the NASDAQ and 90% to the returns of crypto. And I suddenly realized that we've now got the single most powerful factor in all of investing that's ever existed, that everything is tied to this debasement of currency, where they print excess currency and it optically changes the denominator so the value of the assets goes optically higher. I also realized that that also meant that our hurdle rate for our investing, we have to offset that debasement plus inflation. So we get to like this 11% hurdle rate for our investing. And then I realized when I put all assets together and looked at them, since 2012, there are only 2 assets that really outperformed. Technology, because every day is more digital than yesterday, or tomorrow is more digital than today. And that was doing about 18% a year in returns. So yes, it was compounding wealth. The S&P and gold and all of these things were basically in line with debasement, i.e. you weren't getting richer by owning them. And then there was crypto. And crypto was the fastest adoption of any technology the world had ever seen prior to AI. It was growing at twice the speed the internet grew at, and it was producing 145% returns over the same period per year, including 3 80% drawdowns. Mm-hmm. And so, okay, if everything's driven by one macro factor, we have this urgent pressing need in a highly indebted economy for new rails to operate within, then you only have 2 bets, which is the technology and crypto. And when you divide the NASDAQ by Bitcoin, it's down 99.97%. So you have the single most powerful macro trade of all time that offsets the debasement, There is an adoption of a technology for the new internet. And so I'm like, well, if there's any time to be all in, this is it. And so I went from being a diversified investor in global macro currencies, interest rates, commodities, to being highly focused on technology and crypto, with crypto being the single most important bet of all time.
Raoul Pal says Bitcoin, now a $4 trillion asset, could reach $200 trillion as adoption and liquidity grow, making crypto and tech the top macro trade. Institutional interest and market resilience point to another potential rally. He adds that token burns only work when backed by real demand, like Binance, while tokens without adoption, such as Shiba Inu, see little effect.
I didn't understand the debasement of currency at that time. We understood something was going on with the central bank balance sheets, that it was driving markets. We didn't really understand any of that. But my thought process was, at the time, Bitcoin was $200. And I said, listen, it's either worth zero, or this is the future of the entire financial system and everything will get recorded on blockchain. And then we know who owns what. And that was my simple thesis. And I said, listen, if I just use gold as the basis of understanding, I can impute like a stock to flow, how much gold is above ground versus known reserves of gold, and do the same for Bitcoin. And I got, well, Bitcoin's probably worth $1 million. And that was when gold was like $2,500 or so. And I said, okay, well, let's discount me by 90% because I don't know. So Bitcoin's at least worth $100,000 and it's only $200 now. I said, this is the greatest trade the world has ever seen. And it proved to be so. And it's the same thesis. Is blockchain rails are the future of the financial system. I just didn't realize, because smart contracts weren't around then. But when smart contracts came out, well, it's the future of the internet as well.
Raoul Pal says Bitcoin is positioned for another major rally, driven by adoption, liquidity, and institutional interest, making it a top macro trade. He adds that token burns only add value when backed by real demand, as seen with Binance, while tokens without adoption see little impact. Can token burns boost crypto value? Share your thoughts in the comments.